Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning. It is Wednesday, and we will start with the US stocks, which rebounded for a second day after falling at the open, as investors look forward to President Trump's tariff announcement plans. The S&P 500 reversed a 1% loss and ended 0.4% higher, while the Nasdaq 100 finished 0.8% up. Weak manufacturing data and a slower pace of job openings helped fuel the recovery, as bets on rate cuts from the Fed jumped. Wild swings in stocks have become a regular feature these days, with the VIX at 22 showing growing investor fear. In other markets, the VIX fell for the first day in 5. The dollar rose slightly while the US 10-year yield fell. Bitcoin jumped over 3%. Gold hit a new record of $3,149 an ounce on continuing haven demand before ending slightly in the red, while oil fell for a second straight day after US crude inventory rose more than expected. Domestic currency and bond markets were closed due to financial year end. Coming to domestic stocks, the Nifty dropped 354 points to settle at 23,166, while the India VIX rose from 12.7 to 13.8 as the demand for protection jumped. The NSE 500 small cap and mid cap indexes also ended in the red, but all of them outperformed the Nifty. 11 of the 12 NSE sectors fell, with realty dropping 3.1% and media gaining 2.2%. Breadth for the NSE 500 constituent universe was negative for a second day, with 60% of its members ending lower. The best and worst performers on the Nifty were IndusInd Bank, which rose 5.1%, and HCL Technologies, which fell 3.9% respectively. Yesterday's close below 23,402 has weakened the tactical bull case, but hasn't negated it in any form. This will only happen below 22,677. For now, immediate support for the Nifty lies in the 23,090 to 23,141 zone, with the next downside extension around 22,800 to 22,900. An immediate upside hurdle lies near 23,420, followed by 23,566. Critical downside levels for the small and mid-cap indexes lie at 15,664 and 49,812 respectively. Speaking flows, provisional data show that foreigners withdrew 5,900 crores yesterday. On to derivatives now, and the Nifty's put call ratio went from 0.92 to 0.76, while that of the Bank Nifty went from 0.95 to 0.87. Nifty calls added were greater than the addition that was seen in puts, and implied volatility fell nearly 20 basis points, which meant that on a net basis, people remain bearish. Looking at options concentration for the weekly contract that expires on April 3rd, the trackable range moved lower to between 22,500 and 23,500, with notable additions seen at the 22,800 put strike and the 23,500 call strike. For the same expiration though, near at-the-money calls became more expensive compared to similar distance puts, which means volatility traders were optimistic at least for the upcoming session. Speaking net index options activity, foreigners and proprietary traders remained bearish, while retail investors stayed bullish. Elsewhere, foreigners' net shorts and index futures rose nearly 18,000 contracts to 67,000 contracts, showing an increase in bearish bets. Looking forward to the day, the GIFT Nifty was flat at 7 a.m. Asian markets were mostly down along with the US index futures. Speaking stocks, Indian Hotels, SBI Life and Tata Steel were at horizontal support, while GMDC, HCL Technologies and IRFC were at horizontal resistance. Bandhan Bank, M&M Finance and Redington were at trendline support, while Power Grid and Yes Bank were at trendline resistance. Speaking market breadth, 50%, 28% and 21% of stocks in the NSE 500 were above their 50, 100 and 200-day moving averages. That is a wrap on today's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you all tomorrow at the same hour. Good day and take care.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.